Guys, today we're going to dive into my strategy on how I'm earning $236 per day while the entire crypto market is crashing right now and seeing a massive retracement. A common misconception in this industry is when the market is going down, you are losing money. And yes, you do have unrealized losses, right? But it's just like holding. People are so quick to blame being in liquidity pools and losing money during bear markets, yet they will hold cryptocurrency assets and lose more money during bear markets. It's kind of funny and contradictory, but the point is, if we were already investing into cryptocurrency and now we're investing into DeFi, we should not be worried about when our positions are down. Hey, if we were to take a look over at my positions right now, I'm down $5,200, but I'm not worried. And the reason why is because I am profiting compared to if I was holding in the market. And that's what I was going to be doing if I wasn't in these liquidity positions. Holding in the market, holding Ethereum, holding Bitcoin, holding other cryptocurrency assets like Aave, SPEC, and Aether. Anyways, as I mentioned, I'm doing $236 per day. There are different sectors in my portfolio. One sector is earning $65 per day. The other sector is earning $158 per day, and the other sector is earning $13 per day. Now I want to go ahead and break those sectors down so you guys know I'm not blowing smoke, and keep in mind these are actual daily estimates based on what I've actually earned so far. So they're not random APRs that are being shown on platforms that are crazy 400, 500, 600%. These are actually based on what I've earned so far from these positions. So I have sold the USDC. This one's opened about 5 days ago. It is out of range right now. I am not worried whatsoever, and the reason why is because it is going to kick back in range, and at the same exact time it is doing a 166% APR. Now this has a loss versus holding in the market, which is fine, and the reason why is because this one is an income generating position. This one is meant to produce income, whereas the other ones are meant to have that full growth exposure. So divergence loss in this one, this is practically the only one where I am not going to care about divergence loss in this instance. Anyways, to break this down, this one is a $35 per day projection. Once again, if I was holding all my money in Solana token, I'd actually have $294 less than actually being in this position. So that's why I implement these income positions, because they aren't at as much of a loss whenever the market is going down, but they produce really, really good income, like in this instance, 166% APR. Next one I opened the same day, 5 days ago, December 14th. This is sold to Pyth. I have about $7,100 in here as well. I'm down about $1,000 from the price going down. I do not care that I'm down $1,000. Remember, we want to look at these divergence loss metrics compared to holding my initial assets, holding a 50-50 ratio, and even just holding Pyth in the market. I am at a $128 profit. That is not bad whatsoever, earning about $30 per day from this position. And the beauty of this is I have $137 in earnings, yet I have $128 versus HODL. If we do the math there, that means 93.5% of my earnings are earnings and aren't going towards any divergence loss or anything along those lines. Pretty great. So the first sector, these are my Solana positions. I also have this Camino position over here. It's doing about a 40% APY. This fluctuates a lot. Most of the time it's at 80, 90%. For some reason today it's down 40%. So there must have been some liquidity coming in the market or even just less trading activity. With that being said, if we factor that one in, that's going to be about $13 per day. Not that much. Again, a lot of the times this is going to be more like 30, $40 per day, but I'm factoring in as $13 per day as of today. And then of course we have the main sector, the portfolio, doing $158 per day. And this is about 136% APR across Ethereum to Aave, SPEC to Ethereum, and Ethereum to Aether. Guys, each of these positions are doing a super high APR compared to the risk that I'm taking on. 97% APR on Ethereum to Aave. That is pretty damn good. I would expect something like 60% on this pair. And 60% would be reasonable for the risk that you take on in this pair. SPEC to Ethereum. This one is doing 168% APR. This one I would say is actually in line with the risk that I'm taking on. Again, 168% APR. SPEC is a relatively lower market cap asset, and that's also why I only have about $5,000 allocated here. Once again, it's still profiting versus HODL. This is actually the worst one in the portfolio because it has $108 in earnings, but only a $23 profit versus HODL. But I'm just happy to be in a profit versus HODL because a lot of the times your portfolio will not be whenever you see market downturns like this. And then we have Ethereum to Aether. This has basically no divergence loss. There's $1,001 of earnings and $998 versus HODL, doing a 156% APR. So once again, very, very good. These are all strategies that I have been running for a period of time, which is why I'm at an overall profit for the majority of the strategies. Even though I'm down $2,000 on one single Ethereum to Aether position right now, I'm still have 9.1K overall. So this just goes to show that it matters that market timing is important and it is a crucial aspect in your portfolio, but it is not everything, because if we break this down, you'll notice that I have about 6.8K of earnings. And of that 9.1K, 6.8K is actually profit from earnings. The other 2.3K is profit from the price going up. So keep in mind 2.3K, that's from market timing. The other 6.8 is from time in the market. So the quicker you can get in the market at a good price point, that's going to allow you to lock in some good gains when the market starts to go up, which is why days like today are days that I am entering into liquidity positions as opposed to exiting out of them. I am not fretting. I am not worried. I am not scared. I am opening up new positions, sometimes with leverage, sometimes with capital straight from my bank account. That way I could lock in new good price points and I could see profits exactly like I'm seeing over on Ethereum to Aether right now, being up 9.1K. I get that time in the market by getting invested as soon as possible. And I also get that asset appreciation when the market starts to go up. Again, most people see this, they are panicking, they are making mistakes. Perhaps that's because they are down on their position, or perhaps that's because they have a divergence loss that is eating up all of their earnings because their positions were not structured properly. What I'm here to show you today is if you do structure your portfolio properly, which is something that we teach you within DeFi Excel and DeFi Legacy, then you will not have portfolio leakage and you will be able to see a profit against HODL in these downturn markets. And what that means is instead of being down 5.3%, 9.5%, you'll be down slightly less than this. And over time, you'll have earnings that continuously build up to make it to the point where maybe you are down 9% from the assets declining, but then you've already made 9% in earnings and fees. So that way it makes up for that entire 9% loss right there. Now, one of the cool aspects about Metrics Finance is we can track divergence loss on a day-by-day basis. For example, over here, we had more divergence loss than what we currently do. And the reason why is because there was more divergence between those two assets, as you can see. If we were to dive into another position that I'm currently in, like spec to Ethereum, you could see that divergence is starting to pick up, which means that divergence loss is starting to come in hot. We have to be aware of that. We have to be careful when those two lines are diverging and creating divergence loss. We're going to do the same exact analysis over on Ethereum to Aave. You'll notice that these two have a very, very solid correlation because the lines are basically right on top of each other, which means that 95% of the time from this position, we are going to be outperforming HODL while still earning a 97% APR. The beauty of this is this chart does not factor in any earnings whatsoever, meaning that we are getting an accurate depiction of what our divergence loss actually looks like in these positions. So again, to talk about what I'm accumulating right now, I already bought some Ethereum with some leverage. I already bought some Aave token with leverage just to put up on the Aave platform actually, so I could borrow against it and have more leverage. And as far as money from my bank account goes, once I see a good little bottom for the market, I'm going to start to accumulate some assets like AVAX that have done very, very well over the past couple months. Also assets like Link that have done very, very well over the past couple months. But in my opinion, these are not crazy good buy-in prices yet. When Aave is down below 200, I plan to accumulate some more of it. I've already bought some Render as well, but if we go below 650, I'm looking to accumulate more Render. GRT is a solid asset. Pith is a solid asset. There's a ton of solid assets. These new assets that I'm accumulating, I'm going to put into liquidity pools. So for example, I'm running Sol Pith right now. If I'm accumulating more Pith, it's going in the Sol Pith pool. If I start accumulating more Aether or Aave token from my bank account, it's most likely going in Ethereum Aave or Ethereum Aether basically. And that's because I've had a huge bag of HODL positions, roughly $150,000 that I've been able to build up through my DeFi portfolio over the past 6 or so months. With that being said, my DeFi portfolio is roughly $70,000 and I want to start to balance those out, get my DeFi portfolio up to about $100,000. And then from there, I'll start to focus on HODLs again. So again, it comes down to portfolio balance. We've had a couple videos about portfolio balance on the channel in the past. So if you guys want to make sure that you don't miss out on any videos like that, make sure to drop a like, make sure to subscribe and turn on notifications for the channel so you don't miss out on those types of videos. Of course, I will keep you guys updated in our DeFi Legacy and DeFi Excel communities. I wish you guys the best of luck in this little dip that we are seeing. Take this as an opportunity. Do not be scared. Do not fret. You should only be scared and you should only fret if you purchased at the absolute top. And whenever you do make a purchase, whether it's at the top or a bottom, ask yourself, do I think you'll be at a higher price in the future? And if you do, then that's probably a decent buying point. Might not be the best, but it might be a decent buying point. Hope you guys enjoyed it and I will see you guys in the next one. Peace out.